Greg's Stock Analysis, a lot of requests here and there in the comments, so let's look at what's going on. This is a growing UK bakery and good dividend yield, good cash flows, good growth ahead. What's wrong and is it a buy now? So they are constantly growing their shops, 2,600 going to 4,500 over the long term. They have a plan, they keep on growing, everything looks okay. If we look at the numbers, sales are still up 6%, like for like sales even up, even if we know that the situation in the UK is not that stellar, but still okay, going for the openings, dealing with supermarkets, Iceland, Tesco, managing cost inflation. So pre-tax profit a little bit down, okay, that's because of the inflation and everything. However, still growing, so this might be a situation when the underlying business is still growing, but temporary fluctuations make the stock cheaper. This is the decline in earnings, but there are still earnings like for like on the decline, but that is the UK. Even if you look at the market for takeaway and fast food, you can see it turn negative. They are still good relative performing, and we have also discussed this with Domino's. That's the situation in the UK. You can't fight the market, but if you're still doing okay, it means you're doing okay. The profit bridge, down on cost inflation, up on like-for-like sales growth, so that keeps things stable for a while. If this growth disappears, that would then significantly hit profits. This is what maybe analysts are worried about, but they still anticipate good growth ahead, opening new stores, good capital allocation policy, growing, paying a dividend, net cash position, no debt, nothing wrong. And they have invested also in the distribution centers, wholesale, things like that. And that capex should give them 100 million in free things to do, let's say, next year, perhaps buybacks. So when you look at things, the guidance is still there, more stores to be opened, operations, nothing wrong. And you can see here the trend. It is never a linear trend. Of course, this was the pandemic years, but the growth has been significant. The growth has been healthy. When you see things growing and net income growing, it doesn't always grow linearly, and the market always thinks that things have to always grow linearly, and they tend to overshoot in exuberance, but also overshoot in panic. Plus, Silchester bought more than 5%. They bought Watson's, so they will likely sell it later. And if they keep on growing, private equity firms might be interested already at current prices. We have seen this activist investor. If they keep on growing, if they double the revenue, if they double the profit, double the yield over time, that's a 10% return going forward. Putting it on my quadrant to watch it, to follow it, so same as flour foods that we recently discussed. Likely 10% return going forward, and then we have to see what else we are missing. Analysts have mixed price target ranges. They are expanding the value proposition, the brand, everything looks good, but growth concerns that this fast food takeaway things have saturated the market for a bit, margin pressures, inflation, and unusually warm or poor weather can impact the company. And that is also key to understand when it comes to changes in valuation. If there is higher pressures, even worse situation in the UK, and net income falls 30%, the stock will fall further. That is the uncertainty or the risk there when it comes to investing in this. And that has been the name of the game. Of course, if you buy here, that's a nice 2x, but you never know whether it can go even lower for a while, but it is something to watch, and at some point there is the value to private owner, because, I don't know, Dubai Fund or Saudi Arabian will buy this for its long-term cash machine. But dividend yield close to the UK 10-year bond yield, that is also something that puts pressure on the stock price. The pound has been going up, then over the last 15 years just going down, so that's also something to keep in mind. Not doing any currency predictions, but it is something to keep in mind. I'm looking towards your other UK suggestions. Give me at least 10 UK value suggestions like this one. Now it's the time perhaps to look at this overlooked market as the UK. Thanks for watching, subscribe for more, and I'll see you in the next video.